Today, we speak of a question that touches every Malaysian's retirement dreams. Are pension fund managers, like EPF, legally accountable for investment losses? Suppose you have worked for decades faithfully contributing to pension funds like EPF, KWAP, or LTAT. Then one day, suppose the newspaper headlines scream about hundreds of millions lost in bad investments. Your heart sinks. You ask yourself, will my golden years become copper pennies? Suppose there's a man called Ahmad and he is a loyal civil servant. He has spent 30 years trusting the system. Every month his EPF contributions go into what he imagined would be a treasure chest, which he will open on retirement. But recently, he's been reading disturbing news. EPF has lost RM 500 million on airport shares. KWAP's returns are volatile. Investment panels are making questionable decisions. Ahmad asks the one question haunting the hearts of millions of Malaysians. If these fund managers lose my money through bad decisions, who pays the price? Them or me? Here's where Malaysia faces a constitutional contradiction that should alarm us all. Let's deal with what the Constitution promises versus reality. Article 13 of the Federal Constitution makes a crystal clear promise to you. No person shall be deprived of property save in accordance with law. Now, your EPF contributions are your property. They are held in trust for you by the government. But here is the twist. While your contributions are compulsory, because if you don't pay or your employer doesn't pay, you or him will face criminal charges, the managers handling your billions operate under a different set of rules. Under the Retirement Fund Act 2007, KWAP managers have sweeping investment powers. They can invest in everything from government bonds to private equity, from local stocks to overseas markets. The law gives them this authority because someone has to take the calculated risk to grow your nest egg. But what happens when those calculated risks become costly mistakes? So we have to do a reality check. And here is the uncomfortable truth. Under the current Malaysian law, pension fund managers are not generally personally liable for investment losses, even when those losses run into the hundreds of millions, billions, or trillions. Why? Because the law recognizes that all investment carries inherent risk. If we started prosecuting every fund manager whose investments went bad, who would dare manage these funds? Think of it this way. A skilled surgeon can still lose a patient despite following all the proper protocols and procedures. Similarly, a competent fund manager can still lose money despite making reasonable decisions. The word is reasonable. So there's a red line when accountability kicks in. And this is a very important distinction. Fund managers enjoy protection only when they act within their fiduciary duties. Fiduciary means trustee. Cross that red line into negligence or fraud or corruption, and the law comes down hard. Managers must act with the care, skill, and diligence that a prudent person would exercise with their own money. This is the famous prudent person rule, still razor sharp after decades of legal evolution. Now, recent scandals show this isn't just theory. EPF's controversial MAHB share trading, where they allegedly sold low and bought high, is now under parliamentary scrutiny precisely because it raises questions about prudent decision making. What does the law say? The Retirement Fund Act 2007 is specific about accountability. Under Section 20, anyone responsible for managing pension or any affairs of any fund who commits an offence can face up to 2 million in fines or 10 years imprisonment. But here's the catch. Proving negligence or misconduct is not so easy. You must show that when any reasonable pension fund manager would have sailed away, our fellows, our fund managers, waded into dangerous waters swimming with sharks. So there is a framework called the Fiduciary Duty Framework. Malaysian trust law imposes several key duties on pension fund managers. The first is the duty of loyalty. Managers must act solely in the interest of the beneficiary, you, avoiding conflicts of interest and self-dealing. Second, the duty of prudence. Investments must be made with reasonable care and skill. Then there's a third, the duty of good faith. Managers must act honestly and transparently. If the fund managers break any of these duties, they are personally liable. Personally liable. Now, recent development, and there's a wake-up call. The numbers indicating how much monies we've lost in pension funds are staggering. EPF's investment income has dropped, it is said, 13% in the first quarter of 2025 from 20.0 billion to RM 18.31 billion. The senior journalist P. Gunasegaram has done an analysis and he says the real loss is about 23%, not 13%. KWAP posted record income of 18 billion in 2024, but past volatility raises questions about consistency. When parliamentarians summon EPF executives to explain 500 million in alleged losses, it signals a growing public demand for accountability. Those who come say market volatility they blame it, or they blame Trump for his tariffs. What about losses before Trump became US president? Who are you going to blame? What are your rights then as a contributor? What can you do? Here's your action plan. First, demand transparency. These funds must publish truthful annual reports, so you must read them carefully. Show them to your accountant friends. Ask questions. Is this right? Second, question any unusual pattern in tradings. One-off losses might be acceptable, but consistent poor performance is not acceptable. Third, file complaints through proper channels instead of writing in your WhatsApp messages. The fund's ombudsman, the Ministry of Finance, Securities Commission, your MP, write a letter to the Prime Minister asking what's happening. Fourth, support legal reforms. Demand real-time disclosure from the fund managers and ask them for clearer accountability standards. There is also the international perspective. Globally, pension fund trustees enjoy similar protections for honest losses but face severe penalties for misconduct. The UK and US have seen massive lawsuits over pension mismanagement, leading to stronger government reforms. Malaysia is slowly catching up, but the pace frustrates many contributors who see their retirement security as too important for half measures. So, what's the harsh reality? Malaysian law currently tilts heavily towards protecting fund managers from liability even when losses are substantial. Unless you can prove negligence, fraud, breach of fiduciary duty or corruption, your remedy is limited. So this creates a dangerous moral hazard. When politicians and managers know they are immune from personal consequences, they have no incentive to be extra careful with your money. So there is a need for you to call for reform. We need Parliament to change the law. We need reforms that will, number one, ask for real-time disclosure of all major investment decisions. Two, we need to establish clearer standards. What constitutes proper management and what constitutes negligent management. Number three, We need to create stronger personal liability for managers who fail basic prudence tests. Number 4, we need to give contributors like you meaningful legal recourse beyond criminal prosecution. So in conclusion, your pension contribution represent decades of hard work and sacrifice. You deserve fund managers who treat your money with the same care they treat their own family income. Until our laws catch up with that expectation, you must be vigilant. Monitor your fund's performance. Ask tough questions. Go to Google and ask, what has been the income of fund managers all across the world for the last 30 years, the last 5 years, the last 2 years? Compare how much EPF is giving you. Demand transparency that democracy requires. Remember, in a true democracy, those who control public money must answer to the people whose money they hold. Yours. Your retirement security depends on staying informed. Take care. Ask the right questions in the right order at the right time. Questions are like torchlights. They shine the light upon darkness and give you light and knowledge. Take care and goodbye.